George Cavaligos from Mr. Top Step from the floor of the CME Group. Again, new highs in the treasuries this morning. We have been highlighting quite consistently over the last month or so the fact that as the treasuries are rallying here, we're seeing minor new highs. Again, this morning, the bonds made new highs by 2 ticks, and the 10-year made new highs by 1.5 ticks. We keep seeing these trades to new highs without really bringing in any new buyers, so we've been selling out long positions and getting some small short positions on whenever these contracts are making new highs, nervously so, but the markets are cooperating, and consistently we've seen 1/4 point to 1/2 point back-offs from those highs after the market pops to new highs. We'll keep trading that way. We'll keep seeing that phenomenon here until something changes. Equities are weak again. The data, the jobless claims data, was worse than expected again this morning. We did see a momentary sell-off on the tough talk from the ECB, but the markets then recovered, and now they're selling off again in front of the 30-year auction at noon Chicago time today. So we'll look to cover into the auctions, a small short position there. If they get hit hard enough, there's going to be some small sell stops in the 10-year below last night's 123.20 lows. We would like to try and get long into that sell-off with a tight stop. Keeping an eye on equities. They're trying to bounce back today. I think they're a little bit oversold. They've been down, I think, 5 weeks pretty much consistently. This morning we saw the rollover in the S&P where SEP becomes the front month. There has been a tendency over the last couple of years for the market to put in important turning points on these rollover days. We're kind of hoping we could see a little bit of upside in the equities markets here, keep some downside pressure on the treasuries, just to give the opportunity to get into some kind of better levels where we can put on longs in the treasuries and shorts in the equities again. We're going to be patient with that trade through the next week with the rollover in the S&Ps. There is a strong tendency for the market to rally into the expiration. So I think we'll see equities kind of sideways to higher here over the next week and treasuries sideways to lower, but we're trying to be very cautious right now as all these markets are at quite extreme levels. Keep an eye on the website, guys. We'll be back with fresh data as it comes out.